So good afternoon, ladies and gentlemen. I'm Silvia from INTO FC Stone Shanghai office, and I'm honored that HGCA gave me this chance to share some Chinese market here with you. Yeah, it's my first time to London, and so impressed city. Great buildings, lovely people, long history. And yesterday I attended an art exhibition. It's so impressed. But only one thing, unfortunately, I learned English as my second language since my private school. But when I came in London, I found that I'm not quite familiar with Britain English accent instead of American English accent. So if I make you misunderstand today, I'm so sorry about that, but I will try my best. So let's begin. Today's topic is around the 4 points: China's agriculture consumption and policy, China grain and oilseeds, China market challenges and outlook, China's data transparency. So let us focus on the first part, China's general situation. First thing, let us say some China agriculture consumption outlook. Our market is changing since 35 years ago, but there is still room to grow comparing with Western countries. And China's Statistic Bureau data showed that the urban citizen number was 52.57% in the end of 2012. And estimated this number will be 55% in 2020. But 13 years ago, this number was only 36%. COFCO, a big state-owned company in China, and they estimate Chinese consumption change to 2020. Rice and flour will decrease 5%, and meat and cooking oil will increase 35%. Sugar and dairy will increase separately 52 to 116%. And we have seen our rice and flour increase very stable or slower, because it is enough to adequate for food and clothing. And our diet is changing more to meat and dairy. Currency. China has twice currency policy revolution in 1994 and 2005. And we have seen China yuan appreciate versus US very much. And GDP, comparing with GDP world percentage, US GDP percentage is more closing to China, which US is stable going up, going down, versus China is stable going up. And the China government just set this year's target as 7.5%. So why China imports so many soybeans? This is the reason. China and the world hog production. China produces more pigs than the next 43 nations. But the problem, we afford the highest corn and wheat price in the world. This is the world FOB corn price. We can see China price, DCE, Dalian price here is 391. We can compare with South America, Brazil, and Argentina, only half. And the same situation for wheat. This is the wheat what map weight we made after USDA report every month by our company. And the same situation, China price is highest comparing with other countries. So, let's say why price dispute is so obvious when global grains and oilseeds stocks rebuilding. First, importers say we have to say our reserve policy. This is soybean and rapeseed reserve volume and price. So when we say some news about China reserve, we have to know, is it local reserve or is it central reserve or local reserve? As normally, local reserve is more flexible and similar with commercial stocks to reserve and release. And under above reserve policy, we have our corn price, corn, soybean, wheat, rice. All these government protect farmers' income, which make higher spot price comparing with global market. And for another thing, under such policy, which has changed farmers' plant activity with normal economic plant margin. To 2011, corn, rice, and wheat are highest plant margin crop. Soybean and rapeseed is so poor due to low plant margin but more manpower costs. But in 2013, soybeans and rice margin recovered as farmers, especially in Heilongjiang, switched 1% of acreage from corn to soybeans, rice, and sorghum. Rice and rapeseed, the same situation, but we experienced extremely tight rapeseed meal supply this year, but had such good use number at the beginning of harvest. The market realized acreage was down significantly than what was forecasts. Others we needed to make a notice on cotton. Government only can protect palm areas plant such as Xinjiang province, and possible to be first to try to change protect price system. So why we can't import when we lack of materials? Of course, we only can import wheat, corn, barley, soybean, canola, tapioca from these countries. And for wheat, corn, and rice, we need quotas. Just this year, just released the quotas number. Wheat is about 9.636 million metric tons, but 90% of stated old trading. And corn is about 7.2 million metric tons, and 60% of stated old trading. And cotton is 984,000, 33% of stated old trading. These quotas are releasing twice every year, in the end of January and in the middle of October. So you will find the Chinese buyer will be urgent to arrange their shipments before this period. So let's say China oil and oilseeds. This data is from China National Grains Oils Information Center, which is similar with government data. But we still say our I'll see a slow down growth for oilseed production in China, especially for soybean and rapeseed. Let us say Heilongjiang soybean, which presented about 40% of China's soybean production, and also China rapeseed. It is clear to say acreage down lots. So one reason is arable land shrank the lots since last 10 years. Even though it was stable last 5 years, acreage of stable food grains increased every year, and no room for cash crops. Another reason is that we can see from yield growth situation how corn yield increase versus soybean yield decrease. The same situation with wheat and rapeseed. So under such situation, China only common to use GMO to modify seed or else, which is always lower than global average level. So domestic demand for oilseeds grew by 3% in past 6 years, 5 to 6% between 2009 and 2011, and no growth in other years. Soybean oil was the major contributor to growth. Domestic demand for protein and feed climbed higher. The past 5 years, annual growth was average 8.5 to 8.9. Production of meat and eggs, poultry, and aquatic products grows 3%. So demand for protein oils will keep growing, but at a low speed. The one reason is China population growth, urbanization rate, and GDP growth are unable to maintain a high speed like before. Another reason, estimated average growth of protein in the next 5 years is 4 to 5%. Meat and eggs dropped to 1 and 2, about half of average growth in past 5 years. The third reason, based on the 4 to 5 growth of demand for feed and protein, we estimate the soybean imports will grow by 3 to 4 million tons every year in next 5 years. The fourth reason, China per capita consumption of vegetable oils are exceeded the world average. So the demand will grow at a lower speed in next 5 years. Between 2007 and 2011, vegetable oil grew by 3% per year. In the next 5 years, the growth will drop to 2%. It's around 500,000 metric tons. Growing demand for protein will drive soybean imports increase by 3 to 4 million tons per year. So no need to import more vegetable oils to meet the demand. So this is China soybean monthly imports, and the red is we estimate numbers. And this year, we estimate around 61.5 million metric tons imports, comparing with last year was 58.4 million, so increase 3.1 million. I updated this slide. It's different with you got on your table. We have seen this margin, China soybean cash crush margin is record now. The reason is one is soybean meal recovering from demand from first half of the year. We know we experienced bird flu and the tight soybean supply or soybean import origins transfer from South American to US. Canola monthly imports the same rate as we estimate, and we expected that 3.5 million metric tons imports this year, comparing with last year was 2.92 million metric tons. It's about 500,000 increase. Of course, China require canola meal registered requirements. So this year we decreased a lot of canola meal imports. But we put canola and canola meal together to see the chart to comparing with this year versus last year. It's only 70,000 metric tons less than last year, not too much. Canola crush margin is better than previous as well. This chart is very interesting. It's cash soybean meal versus canola meal spread, because it's very strong correlation. And we have seen, we experienced a record narrow spread and then widen to a substitution level. That means use more soybean meal. The reason is we just mentioned domestic rapeseed production decreased. So, oilseeds and oils outlook. First, fundamentals. Short term, China's supply will be tight due to transfer imports origins from South American to the US. Other oilseeds and meal would be strong with soybean and meal. Oils are weaker than meal and watch the government release policy. Long term, with stocks rebuilding globally, China's supply will improve and price will be in accordance with the global market. Oil are increased stably. On the horizon, China market would be followed with global market, but adjusted by local crush margin and demand. Soybean meal substitution would be back since we import lots of DDGS. Canola meal supply since this November. So grains. This is China corn production on different provinces. We just let you know how big. The first is Heilongjiang, it's about 31 million metric tons. Number two is Jilin, it's 27 million metric tons. The third is Inner Mongolia, it's near 20 million. And Shandong and Henan, it's number fourth and number fifth. And our crop tour just showed the good yield in Jilin Eastern areas this year, and we estimated the total production around increase around 7 to 8 million metric tons this year. But there is some problem issues during this area, because we experienced a very drought and sometimes flood this year. So in North Plain, the quality will worse than last year. But in majority plant area in Northeast, so far the production is very good, but we needed to wait on further harvest. This just let you know logistic flow for China corn market. Big next export area is Northeast and North. South part majority consumption area. And we just mentioned this area big harvest, but this area imports so many cheaper corn from US. So we just think about the problem will come how northeast grains flow to south. There is maybe no trading margin. But these days, if I don't know whether you notice the DCE exchange in China, corn price increase caused by government. Rumors said that government will sustain the freight or traders from ship the grains from northeast to south. So, rich government, all right. Wheat production is similar. Number one plant area, which is Henan, it's around 32 million. Shandong and Hebei, this area normally are good quality wheat. And we noticed this year, this area's production decreased. That's why China's imported so many good quality from Canada and Australia and the US as well. And in Jiangsu, Anhui, Henan, this big majority area, the quality normally is poor, but we needed to watch the spread between corn and wheat spread, because there was a lot of feed substitution. So this is called monthly imports. This is the nearby corn import margin versus Guangdong cash price. So high margin, that means the spread between China market and US market is so wide. That is why whatever state-owned company or private company just use out all their quotas to import. China expected government would increase near $20 per metric ton for wheat this year. And actually, the news just came out last Friday. It is increased $20 per metric ton for protect price of wheat in order to keep planting activity. Thus, China would keep the #1 highest wheat price in the world. Under such situation, China buyers, flour mills, and traders will use out all their wheat quotas and make a plan for whole year to buy as limited quotas can get comparing with their demand. And this is hog feed margin. We have seen requiring from the first half year, and we expected the margin will keep breakdown. Of course, we experienced bird bloom this period, and attractive farmers to feed more hog. And the last half year, the hog feed will be very good, but the feed margin will be bad, cause too much stocks. Outlook, fundamentals, short term. With high protein price for grains, China would look for and continue to buy cheaper grains from market China approved. Long term, domestic market would be in accordance with global market. Big harvest if no rain weather during harvest season would be soon achievement, and China import so much grains from cheaper global market, which is always on demand and would narrow the gap between China and the global market. So the last part, challenges. Yeah, these things we experienced. Big events, I just picked some out. And red is events and black is regulation accordingly. So our challenge is we need to ensure supply as top priority, ensure food safety and public health connect with global markets by importing more raw materials like soybean, wheat, corn, milk, etc. Import more meat, especially for beef and mutton. Yeah, lots of people ask me how can I get a Chinese data resource. Normally, we get it from 3 sources. One is government data, you can see from USDA is similar, and it consults or research companies and big machines or industry companies. But include, we need more transparency, specific historical data, and independent scientific research companies. So that's it. Thank you very much.
Thank you very much indeed, Silvia. We've got 5 minutes for questions, if anybody has got any. One just here in the front.
Hello, my name's Alex Warr. I'm from the UK Flour Millers Association. In Europe, we get very worked up about the potential use of GM grains. And I know that in China, there's been a lot of work looking at innovations in rice and maize and so on. Do you think that the Chinese government will approve the widespread use of GM grains?
You mean GMO problem? Yeah. We talked very hotly in China domestically, but government data show we don't grow GMO, just as a similar situation in Europe. Common people just worry about to use GMO products and affect generation and maybe later generation. But the problem, yeah, we feel we will face very low yield years. It's very confusing to decide by government whether to use or not. So far, yeah, no use, yeah.
Just like here then. One over there, yeah. Were you saying Jenny, were you saying you've got a question there? Okay. Can you put your hand up if you're looking to ask a question? Right there, right at the back.
Okay, Hannah Dumper from HGCA. You were talking about the increased need for transparency and specific information coming out of China. What do you think that will drive that in the future? What do you think is needed to increase that transparency?
Of course, you know why China, just like our US team told us, China data just like a black hole. Of course, no one independent institution, they do research very independently. So I think it's very necessary to someone to collect history data and do very independent field crop investigation before, during every, during every period of season. Yeah, it's very necessary.
Okay, thank you very much indeed. Silvia will be here for a little bit afterwards, and if any of you have got any questions, I'm sure you can put them to her. But thank you very much indeed, Silvia.